Dow closed 831 points lower on Wednesday. So, how did that affect grain markets? From Stuart Peterson, this is the Market 360 Weekly Grain Update for the week of October 8th, 2018. My name is Chad Goodwill, and I am joined by Jordan Ham, one of the market advisors on the grain team in Market 360. All right. Good morning, Jordan. Thanks for taking the time to sit down with us today. Appreciate that.
Morning, Chad.
So, starting off with just some headlines, major things that may have gone on this week. Was wondering if the big Dow drop last week really had any impact at all on commodities markets.
Nothing that you're going to see right off the bat. There was a lot of panic. CNBC did their classic markets in turmoil, which is usually good for a pretty good recovery bounce. And it wasn't too long ago, go back to January, where we saw the Dow take a dip almost twice as big as what we saw last week. And that was supposedly also the end of the world. And we're recovering already this week. So it's something that as the equity markets do continue to get into that overbought territory, and we get concerned with a little bit more of the growth issue that maybe kind of puts a damper on some of these stocks from their returns that we saw the past 2 years. It's something that'll take quite a bit of time before we see the cash or the money flow into the commodities markets and shift away from what is still probably a bull market in the stocks.
Yeah. All right. Well, that makes sense. So why don't we then transition over just to our weekly update? What sort of things did you guys see going on in grain markets this week?
Actually, probably the first exciting end of last week into trickling into this week that we've had in a while. After that WASDE report on Thursday, there was a really good reaction to that.
Good.
And we saw prices bounce across the board, corn, beans, and wheat, with some good follow-through yesterday. Mainly, I guess if we want to take a look at a weekly chart of corn and beans, the biggest thing that you can take note of right now is that some of the longer-term technical indicators, such as the MACD, are starting to flip over. They actually flipped over positive into more of a positive momentum territory last week.
Hey, Jordan, sorry to interrupt, but MACD, I know that stands for Moving Average Convergence Divergence, right? What does that measure?
Yeah, that's correct. Moving average convergence divergence, and that's a measure of two moving averages. The 12 and the 26 day is most commonly used.
Okay.
And it's going to just let us know which way momentum is trending and if there are changes in momentum happening.
Okay, so then what did you see in that this week?
Basically what we saw last week was on the continuous charts, we did start to see that flip over more towards a positive time. More towards a positive momentum showing as opposed to a neutral or negative showing. As we can see here, this is the first time it has flipped positive on the weeklies since you got to go all the way back to actually January before we got some actual real positive movement out of that. And that did lead up to a pretty good rally into the springtime frame. So it's not guaranteed that you'll see a continuation of the breakout we saw here yesterday and Friday. But when that MACD flips on the weekly, it's usually a good sign for the longer term.
Oh, great. Okay. What else did you guys see going on this week?
Outside of that, really just the biggest thing is the reaction to overall a pretty bearish WASDE report. The yield on soybeans did go up a little bit. Corn was a pretty muted change in the supply-use ratios just because the yield did come down a little bit, but they decreased a little bit of the feed and residual. So really muted in terms of changes on the balance sheet, but the reaction was what you're more interested in. If you can have a bearish report and a positive reaction, that typically means that something bigger is at work behind the scenes and could lead to some more short covering from managed money, which could get us into that next tier of prices, or they could decide to try and push it back short and double down on their short position they have now, in which case we might be stuck in a range for a little bit.
Oh, okay. Well, hey, why don't we walk through corn, soybeans, wheat, talk a little bit about what we saw those prices do, and and what your expectations are right now.
Yeah, so we can start with corn. Bottom line would be that on Thursday, going into last Thursday, we were working lower. 1, 2, 3, 4 days lower on the charts, looking like we might be breaking down into the downside after testing the resistance that we saw here around the 368, 369 level. And then the report came out Thursday, and we had actually a bullish daily reversal where we trade lower than the low from the previous day, and then also higher than the high from the previous day. And that's kind of led credence to some follow through Friday, and then yesterday up a few cents.
Okay.
Doing a little back and fill action today, down a couple cents, but bottom line would be that this does look like a bit of a breakout and some continuation into maybe even the highs from August. Not too far, but maybe another dime in the near term would be possible.
Okay, wow, that's great. It's nice to finally have some good news to talk about, isn't it?
Especially with the forecast, really, although it's looking drier right now, a lot of producers are still in a bind. And while it's dry, or drying out, I should say, it's still going to be some time before the guys in, for instance, southern Minnesota or northern Iowa can really get going full throttle again with the wetness that they did see the past 2 weeks.
Okay.
So it's still a mess out there.
Oh, all right. So let's move on to soybeans then. What did we see this week?
Similar price action, actually. You look at it, we were going lower into that WASDE report. Okay. Thursday, we did have a positive reaction to it, but Friday we had some follow through, and then yesterday up about 24 cents. So that does look like we are seeing some type of a breakout above the highs that we had here back early last week when we had this doji where we traded lower and higher and finished the day unchanged. If you can break above that doji and hold, it looks like we could see some more topside, but again, as harvest gets going, it's possible that maybe the wet weather didn't impact the bean crop quite like people are thinking it did over the last 2 weeks, in which case we could be in a range for a while yet.
Okay. And can you remind me what a doji is?
Yeah, so a doji, we can zoom in on this one here actually, going back early last week. It's simply when you trade lower, you open up here, this is your opening price, you trade lower on the day, and then you trade higher at some point, and then you close the day unchanged. It's mainly just a candlestick formation that shows indecision in the market. Not sure whether people want to push it higher, push it lower, and you kind of close the day unchanged. It's usually a pivotal kind of candlestick formation that says, all right, we're either going to go much higher or much lower, and somebody's going to push it one way.
All right, that sounds good. Was there anything then for wheat that we should talk about?
Really, actually, pretty quiet week actually for wheat. We're still in that range that we've been in, going back to really a few weeks ago now when we had our lows come in on the continuous chart around 495. We're in that 495 to 530 on the top side range.
Okay.
We're trading lower today, but then we're kind of coming back here as we approach midday. So looks like it's possible that we could be seeing a breakout given the last 2 days of trade. If we can get above that 530 mark, another nickel from where we are here now, it looks like we could be seeing a little bit more of a continuation there as well. And it would help if corn and beans could get going and wheat maybe follows along then.
Okay, great. I think overall it sounds like the consensus is that we're a little bit more optimistic at this point, given some of the things we've seen. In light of that, what is one thing that you want our clients to be doing this week?
One thing that we could be looking at here is while we're trying to get through the rest of harvest, and as depressing as that might be for a lot of guys, just take a look at prices, see where they're at, compare them to where they were last year at this time. And I think especially for corn, not so for beans, but for corn, it does give kind of a testament to the usage that we're seeing. Prices are much higher than they were last year at this time. That means that your 2019 contract's higher than it was this year, than last year at this same time. So again, similar to last week, be looking forward into 2019 and 2018 sales for this current old crop as well.
Okay.
Just to make sure that we're looking at pricing anything that needs to go at harvest, or at least thinking about that to maybe avoid some of the steeper DP charges that are out there.
Okay, great. Well, Jordan, thank you again for taking the time to walk us through what's been going on in the grain markets. I appreciate it, and we will see you next week.
All right. Thanks, Chad. Have a good one. Bye.
Thank you for joining us for the Market 360 Weekly Grain Update. To access additional resources or learn more about how you may be able to improve your grain marketing, either visit us at stewart-peterson.com or give us a call at 800-334-9779. This is a production of Stewart Peterson Incorporated in beautiful downtown West Bend, Wisconsin.